What's up, everybody? Joe Davin with Healthcare Made Simple Healthcare Solutions team, bringing you another episode of What the Healthcare. This is a series of stuff I've seen over 5 years. Sometimes people aren't taking advantage of certain things out there in the market, or they're not doing their due diligence. And the biggest or most prevalent time I see that are families that are offered employer health coverage. So listen, I get it. I do health insurance, been doing it for 6 years now. I'm licensed in 20 states. This stuff sucks, man. Let's just call it what it is. It's frustrating, it's confusing, and it's meant to be that way. A lot of people get offered their employer health insurance, they take it, no questions asked. They don't want to deal with the individual market. I completely get that. But what you could be doing if you make that choice is giving up a humongous amount of potential savings. Sometimes people being offered employer health coverage are the easiest people for me to help and save a ton of money on their monthly premium and still get them very good coverage. So the thing with employer health insurance is it's almost always going to be ACA compliant, meaning it's got to cover pre-existing, mental health, maternity. The insurance, for the most part, it should be good. Typically the networks are going to be big, but you do have a lack of choices when you're employed, because your employer is only going to offer one specific company in almost all circumstances. Now they might offer a couple different plans, but you aren't able to choose the best plan oftentimes for your situation, unless the employer is just offering a very low deductible option with a huge network. And that also means a lack of network freedom. Sometimes if whatever your employer offers, if your doctor or your hospitals aren't in there, you're kind of out of luck. You know, a lot of employers are trying to save money. They're going to smaller networks. These are things you got to deal with. And then the rates will go up yearly with a lot of these employer plans, and sometimes those rate increases are quite high. So when you're working for an employer, you'll typically have an enrollment period. It'll be a month, any month out of the year. Usually it's at the end of the year. Some companies do it a little bit differently, where you'll choose your coverage. So I wanted to give an example, because this is what your employer will provide you, is a sheet that shows what the coverage costs depending on who's going to be on the plan. So you'll always see an employee only, let's call it $150. Employee and spouse is $650. Employee plus kids, if your spouse is not on the plan, $600. And then you'll see an employee plus family rate of $1,350. You'll always notice, or most of the time you will notice, that there's a big jump up when you add spouse or kids, and especially go to family. And this is because employers are required by law. Well, it's actually a requirement from most of the carriers that they have to cover a certain percentage of this employee-only cost. Okay, so if the employee's rate is $300 a month, the employer would pay 50%. That's $150. They don't have to contribute anything to anybody else in the household. That's why you'll see those big rate jumps. And oftentimes it's just harder for the insurance company, if it's an underwritten product, to know if the health is good. There's other reasons there, but that big reason is the employer does not have to contribute unless they want for these types of families. Okay, so the solution, and this is big news, guys, because we can split up that family a lot of the time. So we'll say, hey, Mr. Johnson, take your employer policy. It's only $150 a month for you. That's great. It's very good coverage. And then for your family, especially if the spouse and kids are healthy, if your wife or your husband, if you're the employee and the kids are pretty healthy, there's great customizable options on the individual side that are available all year round. So you could drop out of your employer plan at any time. And we have the freedom to choose the network, so we can make sure we get your doctors in there. And it'll pay for, we would choose a plan and customize it to your needs, so it only pays for you and what you need. So, you know, if your wife is working and you got the husband and 2 kids, and you're looking for something on the individual side, maybe you don't want a plan that pays for mental health and pays for maternity because you don't need to use it. We can find what we call a non-ACA option, which can lower your rate substantially, and you're not gonna have to pay for all of those services that you don't need. So, for example, the employee could take the work plan, they pay $150. We split up the spouse and kids, maybe we're at 5, 6, 7, depending on where you're at and what we set up. And we're saving you a ton of money. Compared to the $1,350, we're at $750. That's $600 a month. Often, this is pretty average here. I've saved families more because I've seen employer coverages where it's upwards of $2,000 a month or even higher. I've saved them a little bit less, but this is there. This is vacation money right here. I mean, this is fix the roof type of money. This is a big deal, $7,200 a year on average. And but hey, here's the thing. Call me. I know they keep all this confusing. I can determine all this in a 5 to 10 minute conversation with you on the phone. I'm at 708-566-6589. I look forward to hearing from you all.